Good day, traders. How are we doing today? I'm back again with another video that I believe will solve some traders' problems permanently. I want to discuss with you why I trade the daily chart. Okay, why do I fall in love with the daily chart? First and foremost, I want to show you what the daily chart is all about. For the sake of those that do not know, each of the candle in the daily chart is form is open and closed in 1 day of trading. And of course, 1 day of trading includes three major sessions. Okay, you have the Asian session, you have the New York session, and you have the London session. These three sessions, okay, every activities, every volume, every news release, everything that happens within these three sessions is, reflected in what? In just a single candlestick that you see on the chart here. All right. So that's what the daily candle is all about. But of course, we're not, we don't want to base our trading on just a single, on what happens in a single candle. We are looking at the entire structure. What is the structure that is happening? What is taking place in the entire structure of the market? That's what is important to us. But it's also very important for you to know that every activities that happens in three sessions, okay, the New York, starting from the Asian session, you go through London sessions, the overlap between London and New York, and the real New York sessions. Everything that happens there is reflected in just one candle. Okay, and how you are able to relate, the candle that is formed in these sessions, how you're able to relate it with the overall structure of the market is very, very important. If you understand Elliott wave theory very well, and you know that you are in an uptrend, and you know that this is impulse, for instance, this is the daily chart, remember? You know that this is the impulse, and you know that you have a correction here, okay, 1, 2, and 3, and you know that this leg is already equal to this leg. All I'm expecting, okay, all I'm expecting in my daily chart is to, take the fib of this impulse. I've already seen that this is already at my level, hit my level, 50 to 61.8, okay, and the possibility of this structure hitting 78% retracement is there. So what I do is that between this 50 to 61.8 here, okay, I mark them down here. I'm looking for where I'm going to have a bullish engulfing. That is going to be the end of the correction. Do you see that after this big bearish candle, this indecision candle form, this indecision candle form, and after that, what do you have? A bearish engulfing candle. Okay, this signals to me that this correction is over, and I already have equal legs between A, B, and C, equal leg between A and C. I already have it here. So, and I have bullish engulfing in a daily time frame. Okay, in a daily time frame. So, what I just do at this stage is just to go and get my entry. I just go get my entry. Okay, this candle is giving me what we call, buying pressure. When a correction is over and a continuation is to come, what should signal that continuation move is a buy pressure that is in a buy setup. You must have a buy pressure. It is very, very important. And I am comfortable to, to spot my buy setup in a daily candle. So somebody will ask me, Nat, why must it be a daily candle? The reason why it must have to be a daily candle for me, it can be weekly candle to some other people, but why it must be a daily candle for me is because all activities in a day of trade, okay, is reflected in a single daily chart. And what are those trading activities that's reflected in a single daily chart? Asian session, London session, London New York overlap, New York session. All activities there, I can see it at a glance. In what? In a single candle. Of course, you know my style, that after I have spotted it like this, all I do is just to go to 1 hour. I want to get a clean entry. Remember, we must have an impulse. No matter how small, you must have an impulse as a result of the engulfing. And where is the impulse now, guys? Look at the impulse. Boom. Look at the impulse here. Can you see the impulse? Okay. Can you see the correction? Can you see the continuation? Boom. That's your trade. Can you see? This is how you do it, guys. This is your trade. And then here to the upside. Can you see? So, you see the daily chart? You can see that I did not just start, I did not just come to 1 hour. If you come to 1 hour here, you are going to be confused. You wouldn't know what you want to do, okay? Because market, the chart is going up and down, up and down, up and down, and not just up and down, up and down. It's going too fast. And then I want to show you something. At this stage now, okay, when you see this impulse here, guys, what will you think? You see this big move to the downside. What do you think? You are looking for three-wave structure in order for you to sell. Because why are you looking at it this way? Because you are looking at a lower time frame. You are looking at 1 hour chart. But myself, who is looking at daily chart, myself who is trading daily chart, already know that from this level, you are having a buy pressure that will launch this move to the upside. Why? Because I have seen the structure. After this impulse on the daily, I've seen the corrective structure is over, and I've seen a buy pressure here in the form of engulfing candlestick pattern. And all I have to do is to go to lower time frame and spot my impulse that is generated as a result of the buy pressure. Okay, I look at the impulse, look at the correction, and then look at my move. Can you see? And then why somebody will ask me, guy, why do you have this buy pressure? Why do you have this buy pressure? Because at this level, there is what we call excess demand over what? Over supply. Okay, the number of people that are demanding to buy AUD against the NZD at this level where you have, at this level of daily buy pressure, the number of people that want to buy AUD against the NZD, they are more. Okay, they are more in numbers. Okay, so those that are selling NZD are there, they are more, but those that are buying AUD against the NZD, they are far, far, far more. So that's what is called excess demand. So whenever there is excess demand for any asset you can think of, whenever there is excess demand of it, okay, against the supply is low, the demand is high. What happened to price? Price must go up. That is why at this stage, once you have spotted your excess demand over supply, price must go up. This is a basic economic principle. Price must go up. That's what you see here. Price goes up. Do you see it now? Okay, let me now tell you another advantage that made me to that I see in trading the daily chart that make me to fall in love with it. It makes me to fall in love with it, right? So you might want to say that for people that trade break of structure, you want to say this is a break of structure. So all you are looking for is what? Correction back to the level, and then you want to sell. That is the basic understanding of those that trade a simple, break and retest market structure. But I am telling you that understanding market structure has gone beyond break of support and retest at resistance. This is a conventional knowledge that a lot of modernization, a lot of improvement has gone into it. And that has made some people invisible when it comes to consistency in making money because they have improved on the level of their knowledge. What you were taught when you started trading, financial market is that whenever there is break of support, there is retest to form a resistance and then to continue to sell in a sell setup. And in a buy setup, when there is break of resistance, the market comes back to retest it as support and then move to the upside. I am telling you that a lot has happened that have brought a lot of improvement into market analysis that you do not need to reason. You do not need to reason that way. You can't be thinking that way. Let's prove it here. This is a support. There is a break of market structure. This is a retest. But I'm telling you, this market is not going to go all the way. Why do we think it's not going to go all the way, guys? You can see that even though you have a three-wave structure here, right here, guys, you see this candle? You see this daily candle? See this daily candle? This is an engulfing candlestick pattern. And what does this, engulfing candlestick pattern shows me in terms of, buy pressure? All right, let me show you. Let me show you where is my arrow. Good. You see this? See this candle, guys? See this candle? You see, it has engulfed this one. And that tells me that a move to the upside is still going to come. So I was not concerned about this move to the downside because I know there is a lot of buyers in this market. So if that is the case, there is going to be probably a complex structure. You see this one moved up, three waves up, a move down, and we're expecting another three waves up. Okay, it is only when we get to this level here, okay, maybe you still see a bullish candle here and you see a bearish candle here on a daily chart. As soon as I see a bearish engulfing candlestick here, all right, as soon as I see it at this level, I know definitely it's not going to go beyond this level. This market is not going to go beyond this level before we sell. You know that we are in an uptrend. I hope you know that we are in an uptrend, but we are beginning to see momentum dying down to the upside on this market. Momentum is dying down gradually, it's dying down. You can see it from here. Okay, you can see it from here. You can see a higher high made here. Okay, here you can see a lower high made here. So that tells me that, hey, guys, get ready for your sell. Get ready for your sell. Okay, so what am I waiting for to get ready to sell this pair? I want this market to pull up here so that the wave you have here, this wave, this level, this wave you have here, I want a repeat of the same thing, this size here. Do you see it here? And then when you have an engulfing, a bearish engulfing candlestick pattern here, that tells me, something like that look like this. If you see something that look like this here, do you see this kind of candlestick pattern? This one or this one? Good. Or let me show you another one. Or you see this one, this type. This type. Don't hurry, just understand. Don't need to hurry. Some people say, make your video too short, too short. Yes, it's good to make it too short. But I want you to understand what we are talking about. Can you see all this candlestick pattern I show you? These are candlestick pattern that, that forecast appropriate sell pressure. Bring it here. Okay? If you bring those candlestick pattern here, oh, beautiful. As soon as you allow it to finish, let it start and finish. What do I mean by finish? Let there be daily close. Let New York session close with a candle and close it bearish. As soon as it is done like that, All that is required for you to do is go back to 1 hour. You see that there is no way you are going to get a bearish engulfing candlestick pattern on my daily favorite pattern to trade. There is no way I get bearish engulfing that I will not have an impulse in 1 hour. It is that impulse that I want to fib. I want to take a fib of it and I want to target my 50 to 61.8. This is a strike zone, guys. Boom, to the downside. At times, if it's a zigzag or expanding flat, it can get to 78. Somebody is saying, what is expanding flat again? What is expanding flat again? Huh? Go check out my videos on corrective structure. You will understand expanding flat. But for the sake of those that do not have ideas of it, look at it. If you have an impulse, every impulse in the market must be corrected. When we say corrected, it means that there must be a retracement along that impulse. That's what correction means. And if a correction is coming like this, you have wave A, you have wave B like this, okay, that break this level here, and you have wave C that break this level here. Can you see? This is an expanding flat to correct this move to the downside. And after the expanding flat is done, you have this move to the downside. Okay, so this three-wave structure, which we call ABC, A here, B here, B here, and C here, is what we call expanding flat. Is that okay now? So what of zigzag? When you talk of zigzag, zigzag is like this. You have an impulse, you have A, you have B. Can you see B does not get to the beginning of A, and you have C. By the time this C comes, it will have come to 78. By the time this C comes, it will have come to 78. That is why you hear me say, if it is a zigzag or expanding flat, it can come to 78% fib retracement. Do you understand now, guys? So as soon as you get to this level, okay, on the daily, you see impulse on 1 hour, correction, boom, to the downside. So can you see it now? So that's why daily chart is my friend. I don't joke with it, guys. But if you are here on a 1 hour time frame, guys, what are you going to see? We are going to look at this market as an uptrend, possibly an uptrend, and maybe you are the type that love to trade the trend line. So what you'll be expecting right now is that you have a push, you have a correction back to trend line, you have a push, you have a correction back to trend line, you are now looking for a push, to move to the heaven. That's how you'll be looking at this market. Nah, it does not work that way. That is not how to trade, guys. Stop trading that way. Do you understand? Stop looking at the market that way. Because to you, this is some way even extend it down here. You see, you extend it down here. Okay, you see why we don't trade trend line like that? We trade structure. We don't trade trend line. Structure is more important. Your trend line is just a guide for you and you alone. Your trend line, the trend line that work for you might not work for any other person. The way you are drawing it is different from the way other person is drawing it. Some people are drawing it to target this area, target this level. Okay? Different ways of drawing it. Okay? So, but what am I saying? Don't look at it this way. In your 1 hour time frame, you are looking at this as an uptrend. But in my daily time frame, I'm looking at this as my uptrend is over. It is either we are due for correction, a bigger correction, as reflected in this divergence. See, up, higher high, lower high. Can you see? That's divergence. So I'm looking at this as a big push that will soon come to the downside. You see, correction, big push. All this, I want to see it as correction that will break down. Okay, it might break down to this level and now start to make, a move to the upside. No problem. But all I know is that this particular move, guys, must come. This particular move must come. Can you see the importance of the daily chart now? It's very, very important. Even if you're a scalper, you need to understand the daily chart. So I've shown you what you do. The advantages, you are able to understand the buy pressure and the sell pressure. You are able to see structure clearly. That's number two. You can see structure clearly when you have impulse on daily and you have correction to 50 to 61.8 on daily. This is a correct level to begin to see a bullish engulfing candlestick pattern. Well, after you have seen bullish engulfing pattern, guys, you still drop it down to 1 hour time frame where you see impulse and correction before you take your trade. Can you see? So there are numerous advantages of using the daily chart. You can see the structure clearly and unambiguously. Clearly and unambiguously. It's not going to confuse you. That's one advantage. Second advantage is that you're able to see the trend well. Okay. Another advantage is that you are able to spot buy pressure and sell pressure at your structural level. Okay. That's another advantage. All right. So if somebody will ask me that is a scalper, so what is his business with the daily? You have a lot of business to even do with the weekly. All right. In my own case, I just check the weekly and the monthly to see what's happening on a bigger picture. On a bigger picture, I want to see the direction we are going in the next 3 months, in the next 4 months. I want to see where we are going. That is the essence of a weekly chart and a monthly chart. But my daily chart give me a precise and concise direction about where I'm going for the week, for the next, trading weeks. I want to know where I'm going. For instance, the day I had this candle, I knew for the next 5 to 6 days, I'm going to trade bullish to the upside because why? The correction of this impulse is over here because I've seen my buy pressure. And in the next 5 days, I'm going to trade in this direction. So even if there is pullback against you, you don't care because you are on a daily chart that is showing a bullish momentum to the upside. You are not care. You don't care rather about any pullback here. Do you understand now? You don't care about it. For instance, let me show you another one, guys. You see this move? You see the whole of this move to the upside? My daily chart is telling me I have a corrective structure here. And somebody will ask, after this corrective structure, why don't you consider taking the trade here? Why do you have to wait to this level for you to confirm that the correction is over? Let me now show you. In daily chart is a magic, guy. Daily chart is a magic. Can you see that at the point that you have this 3 ways move here, okay, you don't have equal length between this move and this move at this level, number one. Number two, this bullish candlestick does not show excess demand over supply, this particular one. Why? The recent sell-off was much of a bigger pressure than this buy. So right now, there are still excess supply over demand. So you are not entitled to look for buy. But look at it here. Boom. Excess supply over demand. Boom. Excess supply over demand. Look at it. Equal supply with demand. Can you see? A market that is coming down now suddenly have a market that was coming down that was having excess supply, excess people that were selling more than those that were buying. That's what I mean by excess supply over demand. And not necessarily mean the number of people. The number of people that are buying this market here may be more, but the volume we are talking, when we talk of excess supply over demand, we are talking of the volume of sell over buy. So 1 million people may be buying here, but only 20,000 people may be selling, but their volume is higher. That is why only 5, 10 market maker can make a difference in the market. Why? They are coming with a big volume. So, but at this level now, the volume of seller, the volume of orders for sellers, and the volume of buyers are the same. That tells me that the corrective structure is over. Do you notice something? As soon as the orders for sell and buy are the same, what happened to what? The length, the size of the correction of A and C is the same. Can you see? A, B, C correction. A with A here, with C here, become the same. And that tells me, as soon as I'm able to get my entry here, I know that in the next 5, 6, 7 trading days, I'm bullish. Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. You are bullish. Keep holding your trades. Can you see? Even if you have any pullback, you don't care because you are trading in the direction of the move as shown by the buy pressure at the end of correction of a daily chart. That is it, guys. I'm still going to do more content on how I use the daily chart to my advantage. All right. But this is just, an introduction to it. You begin to get more gist on the daily chart as time goes on. I think we are done with this one, and I believe you have understood why I use the daily chart. Remember, every activities that ranges from Asian session to London session to New York session, everything is reflected in a single candle in a daily chart. Okay. And when you get to structural area, it is not every candle that is important to me, guys, in the daily chart. I'm only looking at the candle that appears in the structural area. That gives me how the market behave and the volume in the market at the end of a structure. And that tells me when to get in and when not to get in. This is a secret, guys, that you must understand. And as soon as you are able to perfect your craft around this, guys, you become invincible. Do you understand? All right. So I want to thank you for watching. Subscribe to this channel if you want. It's very important. You subscribe to it if you want. I don't force people to subscribe, but I like if you subscribe. What is more important to me is your like. I want you to like the video because when you like this video, YouTube is going to show it to many people. They're going to, suggest it to many people who search similar content on YouTube. They're going to show it to them, and it's going to, benefit a lot more people. I derive joy when I see people trade correctly. Okay, I derive a lot of joy. And please, the only thing you can do to make a difference in this life is to do something that will benefit others. And part of that task that I'm giving to you this day is that when you watch a video and that video, make a difference to you, you are very happy that you are beginning to, see everything that is making you to lose, you are beginning to see the difference. You are beginning to see those things that will make you to start making consistent money. Share that, just like that video. All right. If you like, you may not share it, but like it. Because as you are liking the video, the more YouTube is showing it to many more people who are also looking for solution to their problem. And by that, you are changing the world. You are changing the world for the better. If that is the little you can do, please do it these days. Thank you very much for watching. I see you in my next video. Peace.